Hello and welcome. We're about to dive into a really fascinating story unfolding in the silver market. You might think you know what moves prices, the economy, big world events, but what if I told you there's an invisible force at play, something totally automatic that could be about to shake things up? Let's get right into it.
Now, here's the central puzzle, and it sounds a little crazy, right? How can an investment doing too well be a bad thing for its price? Well, silver has had a fantastic run, but its very success has flipped a hidden switch, a switch that might just trigger a sell-off no matter how much investors love it.
So let's be really clear here. What we're talking about has nothing to do with people's feelings about silver. It's not about whether folks think it's a good buy or not. This is, well, it's more like a machine. It's a pre-programmed, unstoppable process that most people have never even heard of. But it can move billions of dollars almost overnight.
And here's the name of our culprit. It's called the index rebalancing effect. And the players involved? We're talking about massive, passive investment funds. Think of them like giant robots that don't think for themselves. They just follow a very strict set of rules.
At the very heart of this story is something called the Bloomberg Commodity Index, or BCOM for short. You can picture it as a giant recipe that includes all sorts of things: oil, corn, gold, and yes, our friend silver. Now, these passive funds we just mentioned, they have billions and billions of dollars, and their only job is to follow that recipe to the letter.
So what exactly is this index rebalancing? Let's stick with our recipe analogy. Imagine that BCOM index is a pie, and the recipe says silver is supposed to be exactly 5% of that pie. Well, if silver's price goes way up, its slice of the pie might suddenly grow to, say, 7%. The rules of the recipe are strict. It says you have to trim that slice back down to 5%. That's rebalancing. It's totally automatic, and it doesn't care one bit if silver is a tasty ingredient or not.
Okay, so this brings us to the part that feels so backwards. How on earth does silver having a great year lead to a massive sell-off? Let's walk through exactly how this machine works, step by step.
It's actually pretty straightforward when you break it down. First, silver had a great year. Prices shot up. Because of that, its slice of that BCOM pie got way too big, bigger than the recipe allows. So, step 3, the rules kick in. And those rules demand that the slice be trimmed back. And what's the only way to make that slice smaller? You guessed it, sell. A lot. It's not a suggestion, it's a forced automatic sale.
So we know the why behind all this. But the really big question is, just how much selling are we talking about? Because the scale of this thing is, well, it's huge. It's big enough to make some serious waves in the market over a very short time.
And here's the number. According to the research team over at JP Morgan, this rebalancing event is set to trigger about $3.8 billion worth of forced selling in silver. And let me just say that again. This isn't some wild guess. It's a calculation based on the index's own public rules.
And this isn't just happening sometime soon. It's scheduled down to the day. The selling is programmed to start on January 8th. It'll be concentrated over just a few days, ending on January 14th. So we're talking about a very short, very intense burst of selling pressure hitting the market. And hey, just a quick pause here. If you're finding this useful, we'd really appreciate it if you'd like, share, and subscribe to follow us. That way, you won't miss out on any of our future updates.
Now, you might be thinking, what about gold? It's in that index too. Well, gold is also facing some selling, but its situation is totally different. The gold market is much, much bigger. It's deeper. It can handle big trades more easily. For silver, a sale of this size has a much bigger impact. It's kind of like throwing a bowling ball into a backyard swimming pool versus tossing it into the ocean. The pool is going to make a huge splash. The ocean will barely notice. This is probably the most important point to understand. We have to separate this mechanical event from the actual fundamental story of silver. It's so easy to see a price drop and think, uh-oh, something must be wrong with silver. But in this particular case, that's just not what's happening.
And this right here shows you why. The long-term case for silver is still looking pretty solid. Industrial demand, especially for things like solar panels and electric cars, is growing. And its historic role as a safe place to put your money hasn't changed a bit. This selling we're talking about, it's like a temporary storm passing over a very solid house.
All right, let's bring it all together and talk about the most important part. What does all of this actually mean for you? When you see the silver price moving in early January, how should you think about it?
I think this quote from the research really says it all. The selling is temporary and mechanical, and it is not a reflection of its fundamental value. The key thing to remember is that this isn't a surprise fire drill. It's a scheduled event. It's just the market's internal machinery doing a bit of routine housekeeping.
So let's just quickly recap the main points. 1. This is a short, predictable event. 2. Any price drop you see during this week isn't because something is fundamentally wrong with silver. 3. Once January 14th comes and goes, this specific selling pressure is just gone. And finally, for some folks with a long-term view, a price dip caused by a technical quirk like this might even look like an opportunity.
You know, what this whole story really shows us is that the markets today are a different beast. It's not always just about simple supply and demand. Understanding the plumbing of the system, these automatic rules and fund flows, is every bit as important as the old-school analysis. Knowing this stuff is what can help you stay calm when others might panic.
And that really leaves us with one final thought. Now that you've had a peek behind the curtain and you know about this hidden force, how is that going to change the way you look at the markets? The next time you see a sudden, sharp move, you'll know to ask yourself, is this real? Or is it just the machinery at work? Thanks so much for joining me.